Good evening all. So we have come back with a very interesting topic on sovereign wealth funds. And what do we mean by sovereign wealth funds? So basically the saying goes, save your pennies to a rainy day. So saving and trying to save money for a situation of emergency or a situation of need is something that people have always emphasized and taught their children to do. So how did this concept emerge in our current economical environment to funds, investments funds, and sovereign wealth funds? And specifically, I will be talking about sovereign wealth funds in the context of retirement and in the context of state funds, rather than on the general norm of investment fund. So let's talk, or maybe we shall start. So basically, sovereign wealth fund is a fund which gather money from different people or from resources of a particular country or from the surplus of a particular budget, basically in a country or in a company, to the purpose of investing those money to use them in case of emergencies or in case of in case of emergencies or in case of need. Could be a retirement need, or could be a need to cover the expenses of a natural disaster, or could be the expenses that to mitigate the consequences of changes of a particular economical environment or changes of a particular markets, or in a state of a war. So this is a very interesting talk on how some countries across the globe has built sovereign wealth funds, that some of them now exceed the value of $1 trillion, and the trillion is a 1,000 billion, and the billion is a 1,000 million. So you can imagine the amount. So basically, one of the most successful sovereign wealth funds in the world is the Norway Retirement Fund, or I don't know the official name, but basically there is a retirement fund in Norway that have been collecting money from the surplus of oil, from the surplus of oil of oil selling prices, in order to and invested in different markets across the globe in order to utilize this money for retirement purposes, or to cover the expenses, the deficit of their budget at a particular circumstance or at a particular situation. The Gulf countries also in general, Kuwait, Saudi Arabia, UAE, and Qatar, have a very developed investment funds, that many people are working on these funds and are working on investing the money across the globe and looking for investment opportunities and monitoring the investment returns. So this concept is basically one of the most successful economical concepts, to the extent that some of these funds started to affect the global investment climate, and sometimes the prices of a particular company, or the index of a particular market. Now, the important things about these sovereign wealth funds, that you should have a very good management in place that would invest the money in a risk-free environment, and will look at the long term and will not try to lose people money. And the other aspect will be about a proper governance that will not allow any kind of corruption to happen. And if these corruption happens, usually you might lose the money, and if you lost the money, you can't get it back. So with these sovereign wealth funds, proper management, avoiding corruption, is a key pillar for success. It's a good situation where, if you have a sovereign wealth funds and you had a rainy day, you would always have the capability to cover the expenses and to avoid the challenges you face either from markets or natural disaster or in a state of retirement. That was my quick intake on things. I wish that this talk was very useful for you. I will wish you a great evening and I will say salam.